Hello again, and welcome to episode 1, part 2 of the Sputnik moment. On this portion, we will introduce you to Project TridentX and frame the opportunity of the digital transformation for the financial sector and the capital markets across the Latin America. So what does TridentX do and how does it do it? Well, it is a blockchain as a service infrastructure middleware. And what it does basically is creates a regulatory arbitrage bridge that enables intermediaries and fintechs the ability to create a private venue for the small and medium enterprises, giving them access to the global capital markets. How does this work? Well, the enterprise venue basically enables the use of banking methodologies to value and price assets so that they can be represented under a cryptographic token, much like in the past or to this date we have done so for an equity or a bond or debt. What this does is create a primary issuance platform that eventually creates a secondary marketplace so that these positions can be traded among investors. This is, in a way, a definition of an alternative trading system, which is, in this case, a private capital market for equity and debt, and futurely other solutions. And we also provide third-party services, or we enable through our integrated marketplace, secure custody and fiduciary trust for the assets that would be represented or will be traded in this private venue. This is through another blockchain as a service solution that we have with a licensed fiduciary trust that is running an enterprise solution. And finally, what we do provide is a liquidity bridge across asset classes, minimizing friction and transaction cost so that when you are managing assets or you cross between assets, you have to pay very little amounts, and there is no complexity like the one that is currently being used for atomic swaps. TridentX is basically the future capital markets on blockchain through an enterprise solution that is proven and is being used now in Europe and Asia with great success. So what is the opportunity here? Well, as defined by Mr. Griffith, former CEO of NASDAQ, before COVID-19, he claimed that the capital markets would transform itself completely into a blockchain-based market within 5 years. We clearly see that timeline shifted and moving closer to us probably within the next 12 to 24 months. And why is this relevant to everyone? Well, very clearly because every type of financing that anyone uses around the planet, namely the US, Canada, and Europe, is basically financed through some kind of financial instrument that fits within one of these three buckets. No matter whether you're using a credit card, if you're financing your business, or paying your mortgage, all these basically trade on the capital markets. And this is relevant, again, to anyone else, because we need to understand that the capital markets
functions as a way for investors to deposit money today in exchange of a return in the future. And this leads us to a conversation that we had with one of the Fortune 100 3 years ago in Las Vegas, where this utility asked to meet with us for dinner and explained to us that they were worried about their capital structure because they recognized that being a very capital intensive player in the marketplace, they needed to constantly issue and refinance their own working capital for the proper functioning of their operations. And some of the conversation revolved around the transition into the millennial generation, which by definition is now the generation that will take the helm and take our economy moving forward. And why is that important? It's clearly exemplified on the next slide. So the actual issue comes down to the transfer of wealth that will happen between the baby boomers and the millennials. And it has been quantified at around $15 trillion, give or take. For the North American and Latin American market, it's in excess of $9 trillion, or so it was before the capital markets meltdown. Nonetheless, still a lot of money. And how this actually plays out is because millennials, by definition, have a distrust for institutions, and they are one of the most prominent players in the space of cryptocurrencies. And so the polls that have been made with them establish that given the opportunity for them to have $1,000 invested in any asset, over 35% of them would actually prefer $1,000 of Bitcoin over any financial instrument, including government bonds, stocks, real estate, or gold. Which brings us to the actual intersection of what is a security token. Basically, a security token uses the same technology as crypto, the same methodologies and regulations in finance, and it can be properly managed under the same solution. That's really the potential opportunity, but the size of this opportunity. Currently, or before the actual COVID-19 market capitulation, the alternative asset had a size of $79 trillion, and digital assets had a market cap of $6.8 billion. If we were to actually transform a portion of digital assets into a security token, and we created just a percentage allocation of 12%, growing at the current rate, the market cap of a security token around the planet would be close to $1 trillion. So what is the level of investment in infrastructure for blockchain? Well, as we can see here, the actual investment of private equities and venture capital into the space of blockchain, and I would say enterprise blockchain, has been taken up until pretty much last year. Now, I must say that these amounts do not reflect and do not take account the amount of capital expenditure that a lot of the banks have been pouring into their own platforms in order to get to the future of banking and full digital platforms. A clear example is Barclays in the UK, which we have seen the regulatory disclosures and announcements where they have invested over the last 24 months in excess of £3 billion. A lot of the Canadian banks, if you go to the regulatory disclosure documents and see the line items for information technology, have been pouring billions of dollars. And this is due to the trend that we will realize pretty soon, effectively within the next 12 to 24 months, due to the fact that digital is the future for pretty much every industry. But how does this apply to us, and what does this seem to be an opportunity, although the graph seems to be trending down? Well, the fact is that our platform is a regulatory technology piece before and a fintech later. As you can see here, the private investment into deals that have to do with regulatory technologies has been trending upward. And it has continued to be so because we have seen a number of very interesting trends and points that have to do with the maturity of the technology, the adoption, and the consolidation and the convergence of the actual cryptography and cryptocurrencies with the future capital markets. Clearly, like every other market, the consolidation happens post-regulation. A few days ago, there was a note related to the SEC indicting a number of the leading platforms that were engaged in ICOs, including some of the biggest names. And we think that this solidifies our thesis, which is we're building a regulatory arbitrage bridge where we are going to be on the other end with a license that could be sold or rented by companies that want to become players in this future space.
So, but what is really the size of the capital expenditure that has been allocated by global banks and the financial sector into the digital transformation IT? Regulatory data that is reported by big banks, including some of the top ones that you see in the screen, suggests that the total amount of capital expenditure that will be exercised over the next few years and has been already allocated to the digital transformation is north of $100 billion, with a potential of being over $1 trillion over the next 5 years. The total amount of capital expenditure and impact in the sector and other regulated sectors for the space of digital transformation, it is somewhere in the vicinity of 15 to 20 trillion dollars. So it is key not only to understand that this is happening, that this digital transformation in banking will impact other sectors, but that also there is a great opportunity for those who can participate in helping the financial sector and other sectors to digitally transform themselves. Hello again. We hope that you join us for part 3 of episode 1, a Sputnik moment. Thank you.